Something really strange is happening in the Canadian housing market right now. Prices aren't crashing, but almost everything is getting cheaper. And most people don't even see it yet because the number that you see on a listing today is no longer actually the real price.
Yeah, this is one of those moments where headlines are saying the market is stabilizing, prices look flat, people assume that nothing's happening, but under the surface, there is one of the biggest shifts in affordability that we've seen in years.
And if you're an investor, which most of you listening are, this is one of those windows where the data looks confusing, the narrative is unclear, but the opportunity to do good deals in the market is actually improving.
And Dan, that's the craziest part, that this isn't happening because demand is back or demand is strong. It's happening because the market is quietly breaking a little bit.
So let's start with what's actually happening in the data here. We pulled together over 1,000 floor plans across 100 different projects and nearly 4,000 active listings across Canada. And we looked at the pricing changes over a pretty tight window.
And the results are actually really clean. About 22% of those units have had price cuts. About 70% haven't changed at all. And only about 8% have actually increased.
And so these are new build homes, and we're trying to assess what the impact of this GST, HST policy shift is going to be. And so right away, based on the data, this totally kills the narrative that builders are going to raise prices because of the rebate. They're not. They're cutting prices, and they're not cutting prices evenly.
Yeah, but that's not as good of a headline as builders are raising prices because of the rebate, right? No one's going to click on an article that doesn't have some clickbait. But look, the key stat here is that price cuts are happening, and they're happening about over 2.5 times more often than we're seeing price increases. That's not noise. That's actually the direction that the market's going.
And it's not just the frequency of cuts that we're paying attention to, it's also the magnitude, right? The cuts are a lot deeper and broader. So we're seeing price reductions on new build supply being a lot bigger than any of these price increases that you might be seeing across Canada. And cuts are happening across more segments of real estate as well.
Yeah, so look, let's zoom out and look at the bigger picture. What we are really seeing is early stage price discovery, right? This is not a crash, and no, it's not a recovery either. This is just the market trying to figure out what the heck is actually going on and what are things really worth.
And this is where it gets really interesting because we are at the period of time, like we covered this when the HST rebate came out for first-time home buyers. And we mentioned that they were going to have to increase it to all buyers because first-time home buyers can't afford to buy new homes. But, there was this period of time where builders were offering exclusive incentives for first-time home buyers, but they hadn't yet reflected it in the price because the way the mechanics work for most pre-construction transactions is that the builder will actually collect the HST and do the rebate on the buyer's behalf, but they can't do that until the policy actually has royal assent. So as it stands right now, while we're waiting for the policy to get royal assent, you're basically at the point where builders are cutting prices. Some builders are cutting prices. Some builders are holding, and the buyer can go and get the rebate themselves before the builders are able to mechanically issue it for them. So my expectation is probably that you'll actually see more price cuts as the policy moves through the government and whatever they have to do to get the pen stroke to make this fully possible. But the real story isn't the 22% that got cheaper. It's the 70% that didn't change as a result of what I just described.
Yeah, well, here's the caveat. Those actually got cheaper as well. And that's the part that most people are missing here.
Yeah, so this all comes down to the expanded HST rebate that we mentioned, and we've done a whole episode on this when they announced it. So, but let's walk through this simply, right? So you get a full rebate under $1 million, whether you're in the province of Ontario where you get GST, HST, or if you are outside of the province of Ontario, you just get the GST portion on new homes. But there's a full rebate under $1 million, partial up to $1.5 million, and you max out your benefit at about $130,000.
Yeah, exactly. But here is the detail. The devil's in the details. How does this actually work in reality? How does it work in practice? Because people think, okay, well, prices should just drop by that exact amount, right? That'd be the easy mathematical way to figure it out. But that's actually not what's happening, is it, Dan?
No, exactly. Like right now, in a lot of cases, the buyer pays the full price at closing because the policy hasn't received royal assent. So builders actually can't mechanically do the HST on their behalf, as I mentioned before. But so they pay the full price at closing, including the tax. then they get the rebate back later right now.
Yeah, and I'm just because we've said it so many times, royal assent it's a funny term to throw around. And I'm guessing not a lot of people are familiar with it. Basically, that just means it's, I'm looking this up, royal assent meaning, which is funny. It's a posh or British way of saying the Queen's English. Basically, it just means it hasn't gone all the way to the top of the government where things are actually getting signed off and this is actually put into practice. Is that correct?
Doesn't like
Dan?
the royal? I think the royal part means like that it actually has to be signed off by like the queen because we're
Queen?
still part of like the. I think so. Well, the king
Yeah.
now, I guess. But yeah, no, to my
Yeah.
understanding.
Yeah. Oh, Canada. I love it. We still got to wait for the Queen to sign off on things here. Okay, but let's put this actually into numbers here. We like to do that on the show. So you're buying a $900,000 condo. You're effectively saving close to $90,000 up to $100,000. But the sticker price doesn't change. You still pay that $900,000 sticker price.
So from a data perspective, a lot of prices look flat, right? Like you have 70% of the market that hasn't changed prices, but the cost to the buyer who can go get this rebate now, irrespective of the builder, just dropped 10%.
Yeah, I mean, look, 10% is a big deal. It's huge actually, because that basically means you've kind of had this like stealth price cut.
And when you combine that with actual reductions, you get like about 90% of inventory that's effectively discounted right now. So you have the portion that's actually reduced the price. You have all of the ones that have left the price the same and the buyer can get the rebate. Plus you have ones that have increased the price, but they've increased the price less than 10%, let's say. So even if they increase the price 5%, the buyer would still get 10% back, let's say hypothetically. And again, this is crude math, but so the majority of new homes being built in Canada, and 10% would be an Ontario example where they get both GST and HST, but the majority of new build homes in Canada are cheaper today than they were 30 days ago.
So why is this not the headline? You know, I mean, because that's pretty insane, right? I mean, the narrative has been for years, and justifiably so, that housing is unaffordable, unattainable, nothing has changed, but this is kind of meaningful change.
Yeah. Meanwhile, almost the entire new construction market is actually cheaper and nobody's really talking about it. People are still like, oh, builders are greedy and they're going to increase prices and whatever. But, this is actually housing policy making attempt and succeeding at making housing affordable for people.
Yeah. I mean, look, no one's talking about it but us, as we usually do. And look, just like with most policy and most major changes, there is a bit of a catch, and this one really matters. Tell me about it, Dan.
Yeah, so the catch is kind of timing, right? So the rebate isn't always realized up front. So buyers still need cash at closing. They need financing flexibility, and they need confidence that the rebate actually comes through, which, it seemed like people had when the first-time buyer one came in. People were going out and buying as if they were going to get the rebate. It seems like they're doing that still today, and it seems like builders are pricing accordingly. I mean, it would be quite the rug pull if the government just said, sorry, gotcha. Like, it was,
I got you again.
Yeah. It was one day before April Fool's when we announced the policy. So, but stranger things have happened, right? They did that with the capital gains thing, which is good, right? Nobody's complaining. And Lord only knows how many times they've changed the CMHC MLI Select stuff. So it's not unheard of in our sector for the government to rug pull on a policy shift.
No, I mean, I'm happy you brought the CMHC stuff up, Dan, because you and I are fresh off of a presentation that we just gave on CMHC, MLI Select, and multiplexing. And of course, that was one of the things that I always bring up whenever I'm talking about CMHC, specifically MLI Select, is that, this is a very much moving target, that it is very hard for the average person, let alone, a competent broker, to even keep up and manage all of those ongoing changes. Just a quick little plug. We're doing unpacking multiplexes across the country. We just did a sold-out show in Vancouver. We are in Edmonton in mid-June, back in Toronto mid-September, and then Montreal later this year. So tickets in the bio for that. If you're listening anywhere in Alberta or Edmonton, the surrounding areas, come out and say hi. Anyways, let's get back on track here. Sorry. So look, I mean, even though we see affordability, let's say, marginally improving here, liquidity is still tight. That seems to be the number one factor for not just real estate investors or real estate professionals at this point. Liquidity and access to it, that seems to be the problem for Canadians And that right there is I feel the main reason why demand hasn't kind of, snapped back after these policy changes.
Yeah, well, I would say that people aren't eager to buy yet. And so, just because houses got cheaper, like it's funny because now the market kind of has to call, like, or I guess the government is sort of calling the market's bluff where,
Oh, great.
well, really though, like they're saying, hey, you guys asked for cheaper prices. Here you go. Here's 13% off new homes. You better
Yeah,
go buy
but
a
it's at the
house.
same time, it's like, oh, we've made everything else so unaffordable over the last couple of years that, I guess the floor that those prices started at, even though they're discounted now, it's like, well, they were too expensive to begin with, so we're edging them back down to reality a little bit. But I see what you're saying. It's a bit of a catch-22.
Yeah, I like now they're trying to put in stimulative policies because we need them. And
Yeah.
it's, usually by the time you're doing the stimulative policies, it's a little too late because it's not the mechanics or the discounts or whatever aren't the problem. It's the, it's the sentiment has already been killed. And so how are you going to resurrect consumer sentiment? And who knows, like maybe this will do a little bit. I'm interested to see, because if it stimulates the economy, people have more money to spend, they're spending less money on, their mortgage payments or rent, then, it could help. But, speaking of the sentiment side, because the other part that's interesting is, in economics, you can kind of apply these concepts called game theory, which is based, like, it's what it sounds like. It's like literally imagine this as if it's a game, right? And
Yeah.
and developers are playing a game right now. They're basically playing chicken with the market on their pricing strategies as we await this policy. So, talk to me a little bit about the game theory of the whole thing.
Yeah, for sure. And I'm so happy you put this segment in here because I love the modern world kind of gamifying everything, right? Even learning a new language, you got Duolingo and it scores you and et cetera. And man, even with CMHC Select, right? It's a point-based system. For me, when you turn things into a game, when you gamify something, people are more likely to keep score. I think people just take it a bit more seriously as soon as you kind of do that to it. So here's the big question, right? If things are getting cheaper, which we know they are, why aren't builders just cutting prices across the board?
And this is because they're stuck in a game, and we're going to analyze it a little bit. And it's a brutal one, honestly.
Yeah, I mean, look, this is straight up game theory at its finest. And Dan, as you already said, right, this is that playing chicken with the market, which is hard to play chicken with.
So let's walk through a simple example. You've got two projects in the same area, same product, and they're competing with buyers. If builder A cuts prices 10%, they sell faster, but they also reset the market lower. Appraisals drop, and every other unit in the project loses value.
Yeah, not to mention you definitely lose the popularity contest there. Now let's look at builder B, which is then forced to follow builder A's price cuts. So, builder A does it, builder B is forced to do it, builder C, builder D, et cetera, so on and so forth. And that triggers a chain reaction, right? That ripple effect, goes out into the market, and now appraisals are lower, rents are lower, and prices are all theoretically lower.
Now, if you flip it, if both builders hold prices, right? So in this game, they have the option to drop prices or hold prices. If they hold prices, they preserve comps, but they get slower absorption, less interest in their project. Inventory starts to build, financing pressure increases.
Yeah. So, I mean, look, both of them are sitting there and probably thinking, I don't want to be the first guy to cut.
Exactly. So instead, what do? They hold headline pricing. They offer incentives. They do a lot of work to try and market stuff without having to like publicize what they're doing. And they let the rebate do the work.
Yeah, exactly. Which is why we're seeing a lot of, quote unquote, unchanged pricing, but at the same time, actual affordability improving. It always makes me think, you ever drive past those gas stations that are literally right across the street from each other, and one of them's, 10, 20 cents below the other one. You're like, I'm right here. I'm, the more expensive one is right next to me, but the cheaper one is across, 6 lanes of highway or whatever. Which one do I go to,
Yeah. I mean, basically the market's in a temporary truce, but the challenge with this is that it's unstable, because as the policy approaches, it has the potential to break.
Okay, yeah. So let's talk about why this could break and why this probably won't last, because it likely can't.
Yeah, basically the fundamentals don't support it. Like your inventory is building, carrying costs are real for developers, and debt. The guys like Nick who gave you a mortgage, they're not going to wait, right? You still got to pay that on a monthly basis.